A mentor once told me that people spend way more time planning their vacation than their financial future. But I know that's not you. That's why you're tuning into this channel. So today, I want to share with you 5 goals that you should aim to achieve by the time you're 25. And if you're not 25, don't worry. There's still great goals for you to achieve at any age. If you're new here, welcome to NOVARISE. This is the channel where you're going to learn all about real estate investing and overall finances that are going to help you to either invest in real estate or invest in any other asset that you like. Let's get started. So the very first goal that you should aim to achieve by the time you turn 25 is to get a FICO score of at least 720. What is a FICO score? It is your credit score. That FICO score can either make you or break you. Did you know that FICO scores are not only used on credit card applications, but depending on the type of job, that can also be used to decide whether you get to qualify for a job or not? And not just that, if you're looking to sign a lease in a good resident or in a good building, some landlords do check your FICO score as well. And they have a minimum before you can even qualify or consider to apply for that lease. So it is very important that you pay great attention to your FICO score. And even in some states, your FICO score can actually impact the premium of your car insurance. So how do you guarantee getting a good FICO score? Well, if you haven't gotten started with anything that has to do with credit, the first thing you need to do is see if you can qualify for a credit card. And if you don't qualify for a credit card, don't worry. You can actually start applying to one of those prepaid credit cards that is going to help you build your credit over time. And in this screen, you can actually see a couple of examples. And if you're looking for additional options, you can check the link down below in the description or in the comment section. Now, once you have a credit card, regardless of whether it's a regular approved credit card or a prepaid credit card, you need to learn how to use your credit card responsibly. And how do you use your credit card responsibly? Well, you need to understand the 2 types of different debts. There's good debt and there's bad debt. Bad debt is debt that you go into and you're working constantly nonstop with pure sweat in order to pay it off. So using your credit card to pay for a certain lifestyle that you cannot afford, or brand clothing or anything expensive or crazy party, that's not a responsible way to use your credit card. The way I like to use my credit card responsibly, one is to invest because that is considered good debt. And that good debt will actually generate income to help you pay off that credit card. But that's a topic for another episode. The most responsible way to use a credit card right now, if you're getting started, is just simply using it to replace your expenses that you would have normally paid with a debit card or with cash. A great example of this, if you're going to go grocery shopping, because we all need to eat, right? So instead of paying for your groceries cash or using your debit card, you will just simply use your credit card to pay for those groceries. And the money that you would have normally used to buy those groceries, you will use that to pay your credit card. That way, you're building credit, you're not creating an additional or unnecessary expense. And at the same time, if you happen to sign up with a great credit card, chances are you might be racking up some points, and you can use those points to either cash them out for cash back or to use them to travel. If you're looking for credit card options, here's a link down below once again that you can look into to consider your options. Now, a second goal you should aim to achieve by the time you are 25 is to have a savings account where at least 10% of your income goes there. And it's important that you keep that savings account separate from your usual checking account. Why? Because if you get to see your money in there, and if you have easy access to that account, you will be tempted to use it, which is why you should keep your regular expenses on your regular checking bank account and just keep a separate savings account that it will accumulate money over time. And ideally, you will take out 10% of your income and put it towards there. Why do I say 10%? Well, typically, if you're 25 and under, chances are you have less expenses than someone in their 40s with a family and with a mortgage, right? So the younger you can actually set up those healthy habits of setting 10% aside, then it will become easier as you get older. And 10% of your salary going towards your savings account every single month eventually it's going to grow and it's going to look fat enough for you to be able to leverage that money either to buy your primary home or to invest in real estate for cash flow, or why not invest in something else. In my case, I started very young with a 15%, and I've managed to keep 15% every single time. And the more money I made over time, the higher those savings become, because it's not the same to have 15% of $1,000 than having a 15% of $2,000. And the same goes to you. So always try to set aside that 10% of your income. You'll see how easy it gets over time. The third financial goal that you should aim to achieve by the time you are 25 is to have a brokerage account to invest in the stock market. My favorite, it's Robinhood or Vanguard. Vanguard was the very first account that I opened thanks to my mentor, and I still keep it up to today. But then eventually a new company came into the equation, and that was Robinhood. And one of the cool things about Robinhood is that you can buy fractional shares. With Vanguard, you can still do the same, but the interface is different. I like to maintain both because they both have good benefits. And when it comes to investing in the stock market, make sure you do your due diligence. Make sure you research the company. The fundamentals always win on top of everything. Make sure that you invest in a company that has a solid reputation. And if for some reason you're not sure on what to invest, you can try investing your money, for starters, in an ETF. My favorite is the Vanguard S&P Growth ETF, and it goes by the code that you see right here on the screen. This code that you see right here is called the ticker. And when you put it in the search box, it will pull up the ETF that I was telling you about. But once again, don't invest in it just because I say so. Make sure that that ETF works for you. The next financial goal that you should aim to achieve is to set aside another 10% just to invest in the stock market. So originally I talked about a 10% that's going to go towards your saving. If you can, try to set up another 10%, but this time it's going to go to your stock investing. And that way, every month, as soon as you deposit your money, you invest that money immediately. And if your stock choice offers dividends, just make sure you reinvest those dividends into your account. Don't cash them out, reinvest them. And you will soon see a snowball effect. And when you least expect it, you're going to see your stock portfolio grow and grow and grow over the years. And eventually, when it grows big enough, you can either choose to cash it out to invest in real estate or continue to let it sit there and grow. The way I like to invest in the stock market is for the long term. So I tend to not touch the money in the stock market. Sometimes I will sell some securities in order to reinvest that money in another security. But for the most part, I don't touch any of that money. I consider that to be my retirement money. And as soon as I am working, I will do my very best to not touch that money and continue to keep investing. The next goal is to aim to increase your credit card credit lines every 6 months. But only do this if the bank is doing a soft inquiry. Remember, you don't want to have a hard inquiry in your credit report, so only request the credit line increases if the bank promises you that it will be only on a soft inquiry. Why do you want to do this every 6 months? Because this is an opportunity for you to increase your credit line and have access to more capital to invest, but it's also an opportunity to increase your FICO credit score, because the higher the credit line and the lower the debt that you have, the higher your credit score. Thank you for tuning in. I can't wait to read your comments and questions in the comment section, and I will see you in the next video. Take care. Bye-bye.